So I want to take the time to say thank you for all of you guys to join me today. Um, Let me know if you guys are able to see me live on Facebook and also on this Zoom call. So today I want to quickly thank you for all of you guys to, I know some of you are staying home today and certainly trying to build your routine, build whatever you're trying to do. I understand time like this is very challenging, and I say that the reason why I want to put this Zoom call on a weekly basis out is basically I want all of us to have the opportunity to have normal meetings um, and I set out to set this call. Hi Kevin, how are you? And set out this call because um, I do want everyone's to have the opportunity to understanding that we're in this for a long haul, and a lot of people has been really worrying about the situations out there. And the fact is, I myself I host meetups, and this is a new thing for me. Thank you for all of you guys joining in, because I do want to put positivity out there, and I do want to share with every one of you guys how can you use a real estate, how can you real estate to actually really to generate the cash flow, find the deals flow while the world is going on, uncertainty time. This is the best time to learn. So before we really going in, I see a number of people already in the room. Are you guys able to hear me okay? Are you guys can you guys give me some response? Why Calvin, Corey, Arif, you guys able to hear me okay? Chat. Yes, perfect. So thanks, Corey. Thank you. So what I'm gonna do is we're gonna dive in while other people are slowly coming online, but we're gonna dive in. So you guys able to see the slides, I hope, and let me know if you're not. But really, I said that at the beginning. The biggest thing is we have to create a routine. This is the third time I have started a Zoom call in the middle of March, and this thing hits every one of us, and in a big way. The thing is, we need to get better. We need to get back to normal, but we are trying to get back to normal. While everyone's, I have, for example, I have struggling to work at home. I have a little one, 5-year-old yesterday just turned, and it's really challenging. And even the home internet, it doesn't really work. So I'm coming to the office to host this today because the internet is so much better. But really, that's what I want to put out there, and I want to share with you how everyone can be doing real estate, can be doing commercial real estate, just like the way I did, and some other people who have been doing, embarking on this journey. So a little bit about myself. I am investors, and I have been investing since 2006. And investing in the market, multifamily in U.S., but primarily, I educate and sharing with people that is in the real estate field or other fields since 2017. I have host event. I have talked on sharing with different people about how normal people, everyday people, can learn. The really what I've been keep talking about is the X basic steps. How do you find the market? How do you create a broker deal flow? How do you create the relationships? And how do you get the deal flow? Underwriting it, creating a team, financing it, closing it. So this is basically the X steps that I've been sharing again. And I hope all of you would be able to keep doing this. For a lot of attendees has been coming into my my boot camp, to my monthly event. I've been trying to find a way to. I've been talking about all those X steps, and I don't create that myself. I learn from. I'm really fortunate to be able to learn from someone that who really successful in the multifamily field, and I just resharing it. To be honest, I just resharing what works, and here I am. I'm doing it again on a weekly basis. Well, this is really challenging times. Um, I think we need positivity. I think while we all sitting at home, tuning at CBC, tuning at all sort of news outlet, that's opportunities. By the way, I really see this as a great opportunity to be able to find really good deal. Like right now is the time to learn, because I'm gonna share a little bit of what I think in terms of 3 months from now, 6 months from now. And I think as a real estate investor, this is the best time. If 2008 GFC, the great financial crisis, is once in a decade, I think what we're seeing right now has the opportunity has a chance to becomes once in a lifetime opportunity. And I'm going to share with you why. And I'm not alone. In a lot of great minds has been talking about that. And of course, this is like unfolding daily basis. So, but yeah, so I mentioned that I learned from really great mind of people, and you know, so those are some of the people I've been able to do work with, writing books with, and teaching me how to do it, and I want to do the same to you as well. So why I do this Zoom call? Like, I said it already. Like, I want to share some positivity, and I think we're going to get much stronger after this. I think we are going to get really strong after this. The thing is, are we going to do what we need to? Because right now is the time that you have to be really creative. You have to be really strong in terms of building up what you're doing in terms of, if you're a real estate investor, the biggest thing that you have to do right now is creating a deal flow. If you are not creating a deal flow, meaning that you neglect while everyone is really the world, forgive me if I say that crazy, the world is going crazy and you go crazy with them. The thing is, you're not doing what you need to do, meaning that you're creating deal flow, creating relationships, and most importantly is to finding the deals that is going to be cash flow that you were not able to see that in the last 3 to 5 years. I would say 5 years, because the market is so hot, got to the point is so hot, and anyone who are underwriting it, including me and a lot of great minds that has been doing this, and you know what, the market has been done so high. You really have to look really hard, and I think this is the time that, as I said earlier, this is a great opportunity that the people who are doing work right now, currently right now, is going to benefit. So I want all of us to be more prepared. I want you to be mentally prepared, physically prepared. More importantly, when you don't have a routine, that is going to be really hard. So it's really something that I want everyone to be focusing on right now to really to get your routine up. If you were doing deal flow, keep on doing your deal flow. If you're calling your brokers, keep on doing the brokers. If you're doing the market research, there's no reason why you should be stopped doing it right now. This is the best time, as I mentioned it already. Perfect opportunity to reach folks. I was talking to my hi to everyone to Facebook live, and I was talking to my one of my fellow investors and student, and he tell me now is the best time to actually go reach out to brokers. Now, tell me, if you're a broker, the chances is you are not going out to see your properties, right? And you are not going out to do live meeting. So you really stuck. I was talking to a broker in the Memphis market 2 days ago on Monday, and he tell me, you know what? I've been really stuck. And you know why is that? Because you can do due diligence, you can walk the properties, you can do a lot of face-to-face. So now is the perfect opportunity for you folks who's starting out in real estate to really call the brokers. You know, the brokers want to reach out to you because no one else is calling them. Now is the best time to hit the pavement and call them. And number 4, the world's not coming to the end. The world's not coming to the end. We've seen this on 2008. We've seen it on 2001. And we've seen it many times. We don't know how long this is going to last. We don't know that. But what I do know that is the people who are prepared right now, and same as you guys who are diving into this live call, doing the work, calling brokers, finding the capital sources. When the deals comes, guess who is going to have the opportunity to close them like in a matter of seconds? It's going to be you. It's going to be you who are doing the work right now. So make sure you're fully prepared when this passes, because as I said, you know, this is the best time to train. This is the best time to create the deal flow and best time to get investor attentions. And I want to say a little bit on this point is, if you are real estate investors, and you know, just like there's a lot of real estate investors outside the world. And the fact is, most people right now, they are stopping. You know, they are like, you know, look at the news and like, you know what, oh, you know, the count, you know, I know we have to be really, really, be careful, be sensitive. You know, we all know that we all have, you know, someone that is in, you can say that, you know, they are more easy to contact the virus and be sick about it. And you know, get really sick, and you know, we really have to respect you know, the social distancing rules, and you know, respect the rules, and listen to the health officials. There's no discussion about that. But what I'm talking about is, you know, if everyone, you know, I'm talking about attention, supply and demand. If everyone is worrying about the world is going to come down, and if you are the one who is going out there and hit the pavement and talk to investors, telling them that you are going to see this opportunity in about 6 months or 9 months, guess what? Who's going to get the attentions? And that's why I'm doing this. That's why I want you guys to keep doing this. Because you know what? The world is not coming to the end. It's not even close to coming to the end. If you look at some of the data, and I'm going to show some of that, you know, how much money the government is printing and how much money and the government is supporting all the industry. This is the best opportunity for you guys to learn, to go on boot camp, to actually call brokers and get the deal flow. Okay. So the big question is, so can you really cash flow? You know, the biggest thing, can you really cash flow right now? You know, I talk about it. The market is really high, right? So I do think right now is the best opportunity. So the second question is, would your current situation provide the best opportunity to invest, or is this too risky? So my questions to you is, when you look at Dow Jones at 30,000 or 29,000, just a month and a half ago, 45 days ago, was it more risky to invest at that time, or is it more risky to invest right now? Now, obviously, the question is, obviously, is it when you're going so high, it's obviously really risky. Just like what we're doing, what we're seeing, the market has to go up quite a bit because Fed is pumping so much money into that. So it happens to the real estate. Real estate tends to generally lagging 90 days. So 90 days from, you know, the financial market and the whole world. So we're gonna really see, you know, opportunity. Real estate investor owners like me, apartments owners like me right now, we are really nervous. And if you're new, if you haven't invested, you know, I'm going to tell you, you have the leg up, because you know what? You don't have to be nervous like me right now. I'm nervous because the first thing before I actually jump into this call is I was going on Folio. You know, well, for some of you who doesn't know Folio, it's just a management software. I'm really worried. I'm really nervous, I would say, to make sure all my properties, they are doing good. So is it really risky to right now to actually research and learn how to do and build a broker relationship, find the deals that you can cash flow in 6 months? Or is it risky for a million of investors like me who already own it? So of course, the first one is less risky. So I encourage all of you guys to jump in to learn, because that's the best time to learn. And it's a way you can start learning. Well, if you are on this call today, you're already learning. You're already learning because you know what? I'm doing this every week because I see a lot of people, including me, who are stuck at home, have nothing to do except internet. and we spend too much time watching the news. You know what? We don't need to update every 30 seconds, by the way, guys. You know, as much as I want to know about the numbers keep rising, I don't need to know about that. So dive in and contact me every Wednesday. And I'm having this every Wednesday. I'm going to share with you how you can buy apartments, how you can invest in apartments. And we're going to do it in a step-by-step format. The 8 steps that I'm talking about, I'm going to share with you. So hi, everyone's on the Facebook. So cash flow itself hasn't changed, by the way. Cash flow itself has not changed. You know, what I mean by that is a cash flow deal is going to be cash flow deal. And it's going to be even more cash flow, positive cash flow after this settle. The market is going to settle. You know, the market is going to correct. There's no doubt about it. You know, if a market has been on 6 or 7 cap, and when you're going in, I'm talking about last summer or even early this year, if the market was 6 or 7 cap, by all this is going to be settling down. You know, regardless of how much money the Fed is applying to the lenders market, to the bank market, and to the Fannie Mac and all that, there's no doubt about it. The market is going to settle. And so if you can find a market that's doing well, and it's going to do even better. I'm talking about cash flow again. I'm talking about today's topic is talk about how do you invest in multifamily to create cash flow, because you know we all know right now no one is working at home. No, everyone is like a lot of people, you know, is really fortunate staying at home, keep able to work. But for many of us who are not able to work, for all of you guys who are not able to work and waiting for your boss to call in to go back to work, you know, the truth is you need cash flow. You need to learn how to do it. You need to build your cash flow, and you need to find a market that cash flow. That's really, really important. If you are looking for Canadian wine market, you know, and that's why I stress as a Canadian, I love being a Canadian. I love my country. But one thing that I have reservation is I do want to find properties and market who are able to cash flow. And that means I will. And that means invest in market that have lower price enough and rent is high enough. So again, I say that again, the market, the per unit properties, per unit price on the market is low enough, and the rent as per unit level is high enough. So you find that, you know, trader know this is called an arbitrage, or like, you know, the differences where you can find good return. And that's how you cash flow. Unfortunately, a lot of market in the Canadians, they do not cash flow. For all you guys who are staying in US, good luck to you, because you know what, US market has so many markets, and you know, as you come along, keep coming on this Wednesday call, I'm going to share with you some of the market that I really love. I'm going to share with you some of the market I really don't like it because I don't think it can cash flow. You know, for example, if you are investing, if you are investing in New York, you know, I love the New York, like right now, I don't want to pick on that, but you know, just pick it as a talking piece. If you're investing in market that's really, really high right now, you know, like, you know, the market, you know, New York market must be 2 or 3 cap. You know, I was looking at some of the real estate, you know, talk about million per unit or 800,000 per unit. You know, it doesn't matter how much rent you're gonna get, you're not gonna cash flow. And imagine being as a property owner, an investor in those market. If you go in last 2 years and you're hoping, the reason why you go in because you're hoping that the market will keep going up. Well, no one's know that we have arrivals like this. No one's know. But every good investor know that if you want to build generational cash flow, generational wealth for cash flow deals, you have to invest in cash flow deal, meaning the market, again, go back to my analogy, the price per unit price is low enough, and I'm talking about 30 to 50,000 per unit. And the rent is high enough. At the same time, I'm talking about $500 to $1,000 per month per unit. So if you can find those market and you can build cash flow, and whether you are sitting at home right now watching me, you know, to find a way to, as I said on my email, to do a side hustle, you know, do a side hustle. Real estate is the biggest side hustle you can do. You don't need to go to the office, you can call the brokers, you can do the underwriting, you can learn how to do underwriting at home right now, and really learn it and really find the market and really call the brokers, creating deal flow. And that's what I'm talking about. Don't let the news tell you. Hi David. Don't let the news tell you that everything's gonna crash and adjustment is gonna coming. There's no doubt about it. But it's the people who are learning right now. If you stay at home learning, the news and things like that, that's all good. I want you to be up to date. I want you to protect it and respect the rules. But if you're staying at home, you can also learn about how to do real estate investing. You can learn how to do real estate investing, create the deal flow, talk to your investor, and really get that going. Guess who is going to be successful in 6 to 12 months? It's going to be you. So, the second questions that I talk about is the best opportunity is now, right now? It's like a lot of us has been really worried, how low can it go, right? How low can it go? I wish I had the crystal ball, and no one's know how low can it go, but I'm going to share some of this couple of slides. It's really interesting. I have these slides last week, but I also have these slides this week as a comparison. There's three things, that I constantly doing. I figured this out. I don't know whether you guys share it. I find my day is more busy than ever, even though I was staying home, I was coming off the market, the downtime is really empty. But I find I'm really busy because I have to keep myself up to date on at least on two front. What the three front, obviously the case, how this virus has been affecting every one of us, how in terms of the case, in terms of health, because this coronavirus is going to affect the economy in general, and that's the number one. And number two is I'm also paying attention to how the financial market has been doing. The financial market is affected in big time. And the third thing is, how does the case and the financial market affecting the real estate market? And so that's why I'm saying, I've been joining calls and listening to the smart people, and this is my slides. What I mean by that is how they've been looking at that. The truth is, and I'm going to share some of the information on the next slides, is we are all evaluating, meaning that no one's know. I'm sorry if you're expecting me to know, but I'm telling you, I don't know. But what I know is I'm sharing with you. For all of you guys who are on Facebook Live, I encourage you to go on, by the way, to jump into the Zoom call, because the Zoom call had the slides and it's really informational. I'm talking about the Federal Reserve balance sheets right now. So I shared this last week. And so I shared it last week. You see this on 2008, we were at, less than a trillion, the 1M minute 1 trillion. And then the GFC settled down, and then at 2018 we really come down quite a bit until we hit 3.7 trillions, because the Fed is died down quite a bit on the QE. Whether they call it QE 1, 2, 3, or now QE infinite, it doesn't really matter. It's really QE right now. The social market, the stock market is really being socialized, 100%. There's no doubt about it. And I listened to a call, and this call is from a really respected person that he has created the commercial back mortgage real estate back in the 80s and 90s, and he said that if you really want to look at where our world will be going, he said that look at Japan. And Japan has been negative interest rate, really low interest rate for decades, since probably the 80s and 90s. And they have been buying all these companies, the treasuries, and the stock market is highly socialized by the government. And and this is something that we have to really pay attention to, meaning that the low rate is going to stay here for a really long time, because basically the Fed doesn't have the requirements to increase the interest rate. But what I really want to show you is next graph. So this graph We see that it was last week on the 18th, the week before, because Fred, Federal Reserve released this on every Thursday and talk about how much the balance sheet, basically how big of the bank account they're doing right now. So they are owning. They have 4.7 trillion on last week, and this is what we have for this week. So for last week, because again, we don't have the latest one until tomorrow, which is the Thursday. Every Thursday we're gonna have one release. So you see this. This is the steepest ever. You see that with you trying to, for all of you guys who are engineer, I was an engineer, I'm an engineer by trade. For all you guys who are engineer, look at the graph. This is the steepest ever, even steeper than the 2008, the GFC. But this is not going to stop. This is what we're talking about, and you really don't know how much money they're going to. We know the Fed is going to do all they can. And if you has been pay attention to how the Fed has been explained, they're going to do everything they can. And meaning that they have unlimited first of all, they have unlimited ability to print unlimited amount of money to support, you know, the real estate market, the stock market, and you know, and right now they're supporting you and I. You know, that's how crazy it is. They're not only supporting the asset, the company, they're supporting everyone. Thank you, Scott. Thank you, Scott, for putting out there on the link. And there you go. Yes, that's a Zoom link. So everyone is being socialized. You know, you know, I also read another post yesterday. You know, about average American's family have $3,400 to go around for the next little while. And at the end of that post, it's also say that how good is it for $3,400 to last for a family? Well, I think you understand. I think everyone's know this. And if they print, and the question is, if they keep printing money, what does it affect to every one of us? And that's why I say that so many times. If, let's say, if all the real estate is going to be affected in a big time, and the big correction is coming, and office is cutting, this is the office that I'm in right now today. I'm in the room, and we have about 5,000 square feet in here. And the thing is this: we have 5 people on the floor. And when I walk in the plus 15, if you can't get me, plus 15, no one is actually walking on the plus 15. And that's how scary is that. The office is going to be big corrections. The retail, well, this. Before we go in, we already talked about retail disruption. We're already talking about this. And, and go back to the office in Calgary, you're really wondering, when the WCS was hitting $4, someone remind me, Scott, I think Scott reminds me, hitting $4, and how all this oil and gas company will be really creative, thinking about how they can use the office. If they're already knowing that they can send you home and log online and do work, maybe not 100% of the employee, maybe talking about 50% of the employee. So what is the land use? What is the office use that we're gonna see in the next, in the next 5 years in Calgary and million other cities? That's going to be really interesting. What's going to play out in the office and also in the retail sectors. And so that's why, where are you guys right now? All you guys are staying home, watching me live. I'm on the office, but most of you right now are staying home. And I say that so many times, is everyone staying home. Guess what is the biggest demand is going to be for real estate? We still need to, we still need to have a place. We still need to have a shelter. They call shelters, shelter in place. You need to stay at home right now to be able to watch this, right? Same as millions of people. Well, you can stay at home or you're going to stay in apartments. And I know I'm digressing a little bit here, but if you look at the economy, if your boss is going to tell you that, unfortunately, we don't need your service, like a lot of people experience right now. And unfortunately, the foreclosure is going to go high. Guess what millions of people would do? They would sell their home, meaning the real estate, single family home or duplex is going to crash because oversupply, everyone's selling. but they need a place to live. Even if two families go into one family, they need a place to live. They're going to go to apartments. They're going to go to high-end apartment, A, B, C types of apartments. They're going to go to my apartments and other investor apartments. And that's what Grant Cardone has been talking about. That's going to be moving, they're selling all this home right now, not right now, but if the economy keep going worse, and who knows what's going to happen. If keep getting worse, everyone is going to sell and going to move that to renting. And that's why currently the time, the demand, before everyone latching on, everyone is still panicking right now, but before everyone latching on, you need to learn how to spend your time and learn about how to do multifamily investing. So on this graph, hi Yvonne, Yvonne's my aunt. How would you? So this is the graph that I show on last week, and is really talking about, they're projecting, that they're projecting what the GDP is going to be. This is already outdated. Let me tell you, this is already outdated. This. A day out of the information is already outdated. But generally, they talk about really, really big rebound on the GDP on the second and third quarter, and I would say that no matter what kind of projection you're gonna see, whether it's Moody, and I think this one is from the Moody, the big one that I circled it on the red circle there is 3.2 on Q3, and then 14.5. Depends on so many things. Depending on if we're going to go back to work, depending if the coronavirus cases are going to come down, depending on whether we're going to have a vaccine. Everyone's looking at that. But the craziest thing is we're banking on all those things and thinking that we're going to have a vaccine, with kids will come down, and social distancing, everyone will be following the rules, that we're going to have that kind of rebound. And if you hear these stories, if you hear this music before, that that's a huge risk. Some of the really, really smart people are talking about already. This is really, really huge risk. And the world is coming to, this is a week ago, they've talked about a chance for recessions. Now they know that. They don't talk about a chance of recession. We know that we already hit recessions when everyone shut down, the cities, the restaurants, and office, and everyone stayed home. But now we talk about depressions. You know what? By the time that we're going to be on live for all of you guys coming, join me on next week. I guarantee you, they already were talking about, maybe there's a depressions, and then who knows, right? But again, when the real estate market corrected, and that's the best time to find great deals. And this is just talking about this may be too small for all you guys, but this is talking about how much effort the government has been doing. The Fed has been doing 5.4 trillion, and the Euro has been doing 750 billion QE, and JOB, the Bank of Japan, has been always printing money. But the point is this: the government is going to do whatever they can, meaning that to socialize the wealth. And the one really, really big thing is we also have to pay attention to the interest rate. Interest rate is not going to raise, and when the interest rate is not going to raise, and I hear a really great mind talk about this. We really have a cheap liquidity, cheap credit for the last 10 years. The interest rate hasn't gone up. If you're in business, you're real estate, really the 80% or 60% LTV that you're using your loan money to buy is really free money, close to free money. If you're in the 80s, and if that, the great minds and Canadians, the billionaire Schulich is talking about, I have this book called Get Smarter, and one of the chapters talking about inflations. The inflation say every 30 years, you're going to have 10% decrease on money. What it means basically, and it's like every 30 years, and that was the old rule, by the way, every 30 years, and you're going to be, if you have $10 right now, 30 years later, you're gonna have $1, right? Basically, what he means. Basically, you're gonna have 10 times of the inflation coming in every 30 years, and that was basically based on the calculation that he has in his time. But we're into different worlds. What is inflation nowadays? Oil is at $4 WCS, and interest rate is 0. we already have negative interest rate, meaning that if you borrow money from your bank, the bank is going to give you money, and that's why when you have real estate investment, when you can tell them that you're going to earn 20, 15%, they're going to jump on you. The question is, are you going to be doing the things to take advantage of those opportunities or not? And that's my questions to you. Next slide is talking about, there's some optimisms, and we talk about a lot of negative news, and this is actually the graph, and no one's really talking about it. And this talk about the Asia, this is the case, the case, and in the Asia Pacific, meaning the whole Asians, Japan, all the way to China, and so the countries, and India and all that, and Singapore, South Korea. How many cases, new cases, and on a daily basis? And it really has come down. No one's going to share with you all this because they want you to think about the world's coming down. No one's going to share with you and all this because they want you to be panicked, and they want you to stay at home and don't do nothing. And I don't like that. I don't think is great. I think you need to get educated. I think you need to jump on to learn about how to look at your market in a creative way, right? To really learn about how to do market research, capital raising, and all that. So I don't know what is the case right now for us in Canada or in US, but I'm going to try to find some graphs similar to this one just for the rest of the world, for Europe and for the rest of the world. But it's really interesting because the social distancing has been working. Social distancing has been working and whatnot, and isolation has been working in some of the countries. So I found this really interesting slide, so I put it in here as well. Okay, so all you guys are talking about the X steps. Here you go, boom, here you go. What I'm talking about is you need to research, you need to raise capital, you need to build your credibility, building a team, negotiate lucrative deals. This is the single thing I'm going to sink into teeth to you guys. Negotiate the best deals right now. Another thing that I was talking about, I'm really busy on the phone and was talking to brokers and investors. That has been starting to a lot of coming in online is a lot of unrealistic offer to what is going on. The deals coming we are seeing right now today is the deals that were packaged by brokers that were months ago and then going to ready to sell in the spring, right? So brokers telling me there's a lot of unrealistic offers right now. If the offers is unrealistic right now, and we haven't really seen the first today. So April 1st is everyone's watching today, including me, to pay attention of what is, what is the delinquency? What is the collections look like for all the apartments? And we already see unrealistic offers, lowball offers. And guess what it's going to be look like in the summer, in 3 months from now, 6 months from now, even in the winters, I don't need to be very good at real estate. I know when you have 3 million on Social Security last week, and that was from 300,000 or 280,000 the week before, and we're going to be hit higher this week. We're going to hit, I don't know, we're going to hit 4 million, 5 million. I don't know what's the numbers. And it's going to be a lot of people who is going to be out of jobs and a lot of people who are delinquent on their apartments. And guess what? One thing that I'm talking about on this today meetups, on this Zoom calls is the 3 things that you have to really pay attention. And the one number of things that you have to pay attention is the NOI, or how do you do a cap rate? And the cap rate, the NOI is based on your collection, meaning that, so in English, in layman terms, is the higher the rents you can get physically, not the market rents. The physical rents, meaning that how much money your tenants pay you on month-to-month basis, meaning that if you have increase of a delinquency, you have decrease of rents, right? Again, if you have people who are not paying you, who cannot pay you because the boss is telling them, stay at home. If you're working in a restaurant, we don't have business, stay at home. If you're working at Air Canada, 50% of people will lay off and whatnot. they're going to able to sustain first month, maybe second month, but we know that, they cannot sustain forever. This is going to be affect. This is going to affect the deals. This is going to affect as a buyer, how you negotiate your deals, right? And with that, how are you going to underwriting that? And what I mean by that is like, how are you going to underwrite that? Are you underwriting the current cash flow, current income, or you're going to be underwriting based on some of the projection you're going to see when the market is going to be really correct, meaning that people are not paying the rent. So you have to really understand, this is a really different time. You can underwrite based on the T2 now, T12, meaning that you can really understand that what was paying, what the properties that you're trying to buy 12 months ago, even 3 months ago, right? Because all these people now, they're staying in the existing apartment, they're not paying. And you don't know how bad. That's the thing. You don't know how bad is that. And number 7, learn to lead basically means creating a team to manage your properties, some of this remote market. And last thing is really finance, right? The finance, again, is really big. The only 2 big lenders that are still lending new loans, and I've been listening to calls, is the only 2 is the agency loan. Don't get me wrong. Don't quote me wrong. I mean, I could be wrong. But the agency loan, by the way, who knows what is agency loan? Who's going to drink water? Agency loan. So feel free to type. Agency loan basically mean the Freddie Mac, the government loan, and the Freddie Mac, the 2 big agency in U.S. that they are still giving the loan because they have mandate. Their mandate to provide liquidity to finance the properties, to finance all the multifamily purchase. But as far as I know, this is what I've been hearing. All the deal flow has been grounded to halt because it's really simple. When you buy properties, whether commercial or not, you have to see the property. You have to get the appraisal. You have to get the property management to see it. You have to underwrite, watch each one of the units. Right now, we are on this incredible lockdown. No one's moving. So, it affects everyone. It cracks the deal flow. But one thing it doesn't affect is if you are shopping out there, I'm not saying buying, okay? Shopping. If you're shopping out there, this is a wonderful opportunity. This is a wonderful times because don't call me. No, just take my word for that. Is if you has been, hi everyone on Facebook, if you has been calling brokers and you have difficulties calling brokers and returning your calls, try to call them again now. And I want you to do this quick homework. Try to call them again now. I guarantee you, they're going to be so much wanted to work with you because the deal flow, the buyers just dried up. No one's going to buy this time, and no one's want to buy is probably the best time to buy. Don't you agree? And no one's want to research is probably the best time to research because when everyone's trying to research and when everyone's trying to learn and when everyone's trying to push the market so high, that's arguably that's the time that you don't want to go in and buy. And when there's only limited amount of buyer, and that's the time that you're going to see all this cash flow deal coming up. Does it make sense, everyone? Does it make sense, everyone? Good. So really want to sink in on 2 things. The best opportunity is today or it's too risky. I talk about it right now. 2 things you really need to, right now your ability to negotiate, look at the deals is just best thing ever, to be honest. It's the best time to negotiate best deals because the one who need to sell, maybe not right now, but already hearing low balls offer getting accepted. I was talking to investors and already hear about low balls offers is being accepted. It may not be right now, but I'm pretty sure if you wait for 3 months, when people, the $3,400, think about this. Right now we are only in this crazy madness for like 30 days. People still have savings, and the government check is supposed to be coming in about a month. 3 months from now, the drop is, let's just say that let's just say that everything, let's just say we have a vaccine. Let's just say that we're going to have a vaccine in 3 months, which is you know the answer for that. And let's just say that the economy, the lockdown is going to be reopened again in 3 months. Let's just say that this economy is slowly coming back up in 3 months. But that's the time that the cash is already dried up. They don't have income for 3 months, and the $3,400 is going to dry it up, and the layoff is going to keep getting worse. And if you're in the oil and gas industry, just like I was in the real estate, oil and gas industry. Sorry, oil and gas industry is that's double whammy for people who are living in Alberta, living in the oil countries, or Calgary. That that's going to be so many people like that gonna not have jobs, and and we talk about some of the U.S. market, and Texas, Texas is Houston is a big oil market, and Dakota is a big oil market. Go hunt for them, right? And you're going to find lucrative deals in all over the board. I'm going to say when you have millions of people not working, don't have cash, and they are foreclosing, and they're not paying the landlord, meaning that us, you're going to find a lot of lucrative deals. And you have to be really careful. And that's why I say that, that's a big opportunity today. But you have to really, you have to go in as really aggressively, meaning the offers. You cannot put in offers that you were doing last year or even 2 years ago. You have to be really understanding what this means to the properties you're going to buy. So 3 things I said that on my Zoom calls is, find lucrative deals. We talked about it already. Find investors who want to leverage the time, and which is what I want to talk about next meetups. And really, the last thing is really to manage an asset for win-win-win, because as an investor, you're investor, and talk about your passive investor and yourself. Like, I don't know how many of you are passive investors, how many of you are syndicated like I do, and the tenants, and millions of tenants is not going to be afford a home, and they're going to rely on you and I to buy the property, so able to support them, to be able to provide the home, provide reasonable living standard, house for them, apartments for them to stay. So those are the 3 things I want to talk about that in the upcoming Zoom call. But today, the 3 things, all the look at the deals is you have to understand is on the bottom is underwriting the deals. You have to know right now, you have to know how to underwriting deals. People who have joined into my underwriting boot camps, we can do it on face. We can do it on the face-to-face, but I've been thinking of how we can do this in the virtual settings. And I think I will do something creative, and there's some announcement coming online, because I don't want to hold off like this. I think we can do something face-to-face later on, but I think we also need to do something virtual. Maybe it's like more limited as a certain number of group, but we can still underwriting it and do it like that. And what is the 3 main parameters when you're buying? Make sure it's cash flow. And I talk about it many times. The 3 things is like, the cap rate. You have to buy, when you were buying a 6 cap, you have to make sure that you're going to be at least 8, 9, 10 cap. And if not, then that deal just, let me tell you, that deal just not for you, okay? Times like this, you have to be crazy in your offers. And cash on cash, for your investors, arguably is better, because, when the market is giving them so less return, if your deal is, is good, if your deal is great, is awesome. But if your deal is good, but the fact is, the deal is going to be great, right? Why? Because, you're going to see a lot of opportunity deals, meaning that a lot of sellers, they're going to panic. They're going to panic. They want to sell. A lot of motivated sellers, they're going to sell, and that's going to increase your cash on cash, right? And DCR just that coverage ratio. That coverage ratio. Let me know if you not understand. Just say it on the check. Type it on the check. It's just basically that a coverage ratio, DCR, that coverage ratio. You want it to be higher than 1.2. But I think time like this, the bank is going to want even higher, okay? The bank is going to want even higher. And what is the market to avoid? 3 things, talk about that, 3 things. Number 1 is cash flow. Cash flow. We get into this business because people are staying home right now. If you stay at home, your boss telling you that sorry about that, I can't hire you anymore. And, this is the best cash flow opportunities, because you don't, Think about real estate. It's like this. You can leverage, and if you know how to raise capital, you don't have to use your own cash, and you can build cash flow for your investor because you're working for them, finding a market, deal flow, and manage it for them, and you can create cash flow for yourself. And again, number one is cash flow. Number three is free permanent, as I talked about, and the markets to avoid. I say this 3 times in here. When I say the cash flow, we used to only cash flow. The market has been going up for the last 7-8 years. Since 2012, the market has going up 8 years, whatnot. Every year we have 3 to 5% increase of rent. Your guess is as good as me. Do you think the income is going to keep going up for the next, let's just say, the 6 months to 12 months? And you think you can increase your rent for your tenants without suffering high vacancy? And that's why I say that really important. You're going to make sure that cash flow now, and now, not right now. I mean, basically, actually 3 months from now, because now we're still settling down. Now, I'm really, I said it already. I'm concerned on my properties. I'm nervous on my properties. But think about the people who own 1,000 units. If you're a small investor like me, if you're a small investor like yourself, it's great because you have limited amount of liability for your bank. But if you're big investors, and if you're over leveraged, if you have 1,000 units, now is really, really scary time, because if one property doesn't cash flow, you can stand. You can hold on to that. But if you have 10 properties, 20 properties doesn't cash flow, guess how motivated they will be. So when you're underwriting for cash flow, what I mean by that is you need the cash flow now. You need a cash flow 6 months from now, and you need a cash flow, I say that 12 months, but I probably say that you need cash flow 2 years from now. So you need to be really conservative. You really need to pay attention on how you're doing your underwriting. And the 3 things, I say that again as cash flow. Number 1 is the cash on cash, meaning that how much money you put in your total total outlay. Before all this, investor at least want 10-12% cash on cash. You probably can find it even better nowadays with what we're seeing in the real estate market. And that coverage ratio, typically the bank want 1.2. 1.2 is the ratio. I always underwrite it to be higher because I want the bank just look at it and I love this deal. I think you should at least go to 1.4, 1.5 cap rate. I mean, DCR. And the cap rate, why buy? Like, I'm not going to say that people are crazy if right now they're driving to New York or like really expensive market, California. But if the deals hasn't been cash flow, no, okay, I should back it up. If you're like individual investors and you don't have a huge amount of war chest to weather the next 20 years, right? You really need to be knowing that the deal is cash flowing today, because otherwise you just bankrupt, right? So that's what I'm talking about. I'm not talking about the big guys who have billion dollars who finance all the deals, who have million dollars to dig in and maintain the properties. I'm talking about everyday investors right now. You're going to find cap rate. You're going to find a market who are able to get rate at 8, 9, 10%. If not, why bother? The market is still settling. I'm going to challenge you to find deals that at least 8 cap with all this kind of settling down. Because you know what? If not, you're selling yourself in huge risk. If you're raising capital, you're selling your real estate investor, your passive investor, huge risk going in the market right now. 2 years from now, 2 years before, before today, sure, if you're buying 6, 7 cap and do value add, that's fine. And more on the note on value add later. In fact, the bank doesn't favor value add right now because simple. When I talk about value add meaning that the deals that that you go in and do the increase of rent. Now the market is, even if you do the work, and you have to be really, really careful, like how much can you rent, how much can you raise to the market, because the market is, let's just say the market is not coming up or like settling down or even drop a little bit every year. So when you projecting 2 years from now, let's say this is 2 years from now, used to be in here. Now maybe in a little bit coming down. So when you project in 2 years increase, we call it the comms, market comms, to match the market, you have to be really careful. You're doing what it used to be, which is here, or you're doing what the market is going to potentially look like, which is lower. So you have to pay attention. That's why I say underwriting is really, really important right now, even though the market is a great opportunity. The market is a great opportunity for people who prepare. And what are the markets to avoid? I think I mentioned a couple of those, but I really want to dig deep on demand and supply. So no doubt about it, we have a huge demand problem. When we talk about people potentially selling a lot of real estate, investing, and their income coming down, we're going to have a demand problem. What I mean by the demand problems is like when landlords trying to sell, but they cannot find a seller. So we have a really big demand problem. I'm talking about, and then on the supply side, some market, not overly supplied. US has been doing great going into this recession or depressions, and with what I mean by that is in history, with so much supply coming in on the previous recessions in 08, we have so much supply on the market. We don't have that much supply on all the market, but we definitely have oversupply on some of the market. And I'm not going to go into individual market. If you pay attention to those, you know what I'm talking about. They are, they're happening on some of the market that you need to pay attention when you're going in, and it's not hard to find them because. But the good thing is we don't have too much oversupply, but some of the market we definitely have oversupply, and combining with demand is just it's just going to be similar to what we're seeing in the oil, right? Similar to what we're seeing in oil. The supply and the demand is going to be huge on the market, and that we're looking at. And don't rush in. Do your market research at the same time, trying to gauge, talk to your if you're doing 3 markets before, before coming in, I think you should do 5 to 10 market. What I mean by that, talk to 5 to 10 markets, because when you're dealing with times like this, you really need to have an overall understanding on what the market. I'm talking about whole United States and even Canada. You at least need to talk to 3 brokers on every market, trying to get a sense of how much effect has been pinpointed to market basis. But again, or potentially we have a problem over buildings on some of the markets. So we have to pay attention. I say that many times. This is the best time to learn to invest. If you're not doing investment, and if you are sitting at home, I encourage all of you to come to the Zoom call every Wednesday at 11 a.m. You can learn how to the basic. I think this is going to be a long. I was initially I was setting this up to be only to the end of April, but I think we're going to have opportunity to keep doing this because a lot of people, millions of people, in fact, still stay at home. They have this opportunity to stay online and watch, and how we're going to be, following on this stories, and how we can learn about how to do apartment investing. And next one, and so I say that on the next one coming up is on the 8th on the Zoom call, which is next Wednesday, and then we have monthly meetup, which a lot of you guys usually come on meet me at the Calgary Library. We have on the April 11th, we have 1 p.m. on MST. So join those online groups because that's going to be sharing a lot of information, and we have boot camps on writing it. And more information on how we're going to move this online. So with that said, that kind of sum up. I think this right on time right now at the 11 o'clock. I know some of you guys and many of you guys still working at home, so I want to respect the time. But that's sum up today on finding cash flow deals, doing the market research, and next week we're gonna have really talk about the underwriting. So with that said, I want to open up to questions for anyone that's still on the call. if you have questions, please feel free to chime in and let me know. Are you guys still here?
Hey, Howard.
Hello,
Yeah.
everyone.
Can you hear me, Howard?
Yeah.
Hey,
Hey, Scott.
I just got to take off real quick, but just want to say thanks for doing this.
Oh yeah. Thanks for having me. Yeah, nice to have you.
I'll catch up on everybody else's questions for the in the replay.
Of course, yes.
Have a good day.
Have a good day, Scott. No questions? Why have no questions? So with that said, I'm gonna end the call. Thank you for everyone who joining in. Thank you. So I see Douglas, Scott, Everett, Y, and Will, Corey, Calvin, all you guys. Thanks for having. Thanks for coming in today, and I'll see you guys next week. And keep safe, and keep healthy, and start doing it. So yeah, next week is going to raising capital. So raising capital, not on the due diligence. Due diligence is on meetups, and so thank you very much, guys. Appreciate that. Looking forward to see you guys next Wednesday at 11 a.m. Thank you for having. Ciao. I'm gonna wave all you guys. My apologies. I wasn't able to wave all you guys. And thanks, Scott, again for sharing the link here. Will, you're funny. Oh, there's a lot of people who came in online. That's awesome. So for all of you guys who's still on live on Facebook, thank you for tuning in. I'm gonna post on the video online. I'm gonna post on the slides online for all of you guys who missed the call today. And I'm just don't want to miss all of you guys. I'm just gonna hit wave for all of you guys spending time. God bless you and stay healthy, stay safe, and I think hi all you guys. But once again, thanks for tuning in. Looking forward to see you guys next Wednesday. Thanks, Calvin. Calvin, you still here? Oh no, you're gone. Bye, Douglas. I think you're the last one here. I'm gonna end the call.